Hey guys, Akil Stokes here. Welcome back to another Weekend Trading Edge video. Last week we talked about how we thought the markets would act this past week, I guess you could say, and they did not disappoint. If you remember the video, we said that we have a heavy fundamental news load towards the end of the week and that I anticipated really no movement in the market Monday through Thursday and then a big boom on Friday, and well, the markets did not disappoint. And what I want to touch on this week before we hop into the charts is how I handle situations like that, because they can be pretty tricky for traders, especially for novice traders. And what I'd like to do in situations where I know that the market really isn't going to do much on a day-to-day basis, but I know that a big boom is coming and I don't necessarily know which direction it's coming in, is I just want to make sure that I go over what my key levels are. And something that I make a weekly and a daily habit of doing is identifying key levels of market and of key levels of price in the market. And for me personally, key levels are going to be really determined by major and minor levels of support and resistance. And what's interesting about this is that, I use a pre-market checklist. See if I can bring it up for you guys. It looks something like this. And you can see it's pretty simple. And something the internet loves to make fun of me for is by being pretty simple. I can't tell you guys how many times I've gotten comments saying, Akil, your office looks so basic, or Akil, I can't believe you drive that car, right? I drive, my wife's got a new car, but I drive, what year is it? 2005 Toyota Camry, and I'm going to drive it until it breaks down. And the same thing with stuff I show you online, whether it's our money management spreadsheet, our position sizing calculator. A lot of traders are surprised that I don't use this type of fancy software. I use Word documents in Excel. And seeing how this is a video where we try to dispel and debunk a lot of those myths about trading and kind of give you a realistic view of what it really takes to be successful, I want you guys that are new to understand that you don't have to have the flashy stuff to be a successful trader. You don't have to be driving a Lambo and walking around with a tiger and wearing gold chains and $100,000 subscription services to Bloomberg and Reuters and fancy position sizing calculators, right? You can do it basically by yourself. Now, again, there's nothing wrong if you want to pay for that type of stuff, but just understand you don't need to. The things you want to ask yourself as a trader are, is this going to make my trading easier? Is it going to push my trading in the right direction? And if you deem that it's worth the value, then yes, it's good for you to get for your business. If you deem that, hey, I can use a cheaper alternative and get the same result, then boom, just do it yourself. And you can see mine is pretty simple because I only need to track a few things, right? I obviously want to keep track of my current positions in the market so I don't forget what I'm trading. This was more of an issue when I had a very large portfolio, about a 20 pair portfolio instead of the 9 pair portfolio that I trade now. But I want to keep track of that. I want to keep track of major news events for the week. And again, not all news events, because most of them are going to be insignificant, but the major ones, the ones that I think are going to have an effect on the market, the ones that I personally want to avoid. And then I'm going to I'm going to jot down the pairs that I trade, higher time frame trend, and key levels of support and resistance. And these are basically levels that I need to pay attention to in the market. I'll also kind of double down on this by having horizontal lines on my chart, just as a reminder of, hey, these are the levels that I need to pay attention to. And what happens during these major news events, if I just go to like a euro dollar chart real quick, is you can see we see these big booms, right? We see these big aggressive moves, these high momentum candles. And if you're not prepared, you kind of get caught up in the emotional reaction of it, where you're kind of caught off guard. Instead of being in stress, you're in de-stress. You don't know what to do. You feel like you're missing the move. You don't know how to handle the situation, and you make an emotional decision, you panic and you make a mistake. But if you have the lines on your chart, if you have a pre-market checklist and you have levels defined, you already can tell yourself, hey, if price goes up, this is where I'm looking for it to go up to. If price goes down, this is where I'm looking for it to go down to. If we get to this level, then look for XYZ. If we get to this level, look for XYZ. And then you can just really settle yourself down and follow through with the plan. And what I'm going to show you in today's video, heading over to the charts, are some examples of, hey, price has either gotten to these key levels and now we're looking for some type of reaction there for a trading opportunity, or we've kind of gotten halfway there or partially there and we're still looking for a continued move to that next level. So before we hit the charts, do me a favor, guys. I've been doing this video for free for the last, consistently for the last, 10 years or so. I don't really ask for much, but I am asking for something today. Do me a favor. Hit that like button. If you like what you see, do it every week. And if you're someone that watches this video, but you don't happen to be subscribed, but you tune in each and every week, just do me a favor, hit that subscribe button. And if don't hit the notification thing, it won't bug you or anything like that. But it does support the channel. It does allow us to grow. It does allow us to reach more traders each and every week. And still, to this day, every week I get an email from a trader who's new to the video, who's shocked that there's so many episodes, and they're just really complimenting me and Jason Grace on how it's a refreshing message that we're delivering and how it's starting to push them in the right direction. So keep doing it. It is very important. Also, speaking of messages, one more follow-up before we get into the charts. I did get a message this week from a trader who is new to the video and said that, hey, he went through baby pips. He sees random YouTube videos and it feels like he's not really putting things together. And we always talk about how baby pips is a good resource, but it's not going to teach you how to trade. YouTube videos, even my own here, if you just watch all of them, it's a good resource to learn, but it's not going to teach you how to trade. Teaching someone how to trade has to be done in a very specific fashion. And what I recommended this trader does, and I recommend to you guys as well, is hop on the platform, www.tier1trading.com. Check out that 14-day trial. You get a lot of free stuff with those 14 days. You get courses, you get access to live room, you get access to our community software, right? Sponge as much as you can in those 14 days. Get an idea of what you need to know in order to become a consistently profitable trader. And of course, if you feel like staying along with us, stay along. But if you don't, at least you kind of have an outline of, hey, this is what I need to learn. This is what's going to be important moving forward. This is what I can kind of put to the wayside for the time being. So it kind of gives you that guidance, gives you that direction, even if you're not going to be a part of our community. So check it out, www.tier1trading.com, 14-day trial membership. All right, chart time. So we're going to start off here on Dollar Canada. Live room members are going to remember this very clearly. This was the trade which had a very nice V reversal. We came down to this little left shoulder and we were waiting for a reaction, right? We saw our consolidation and we basically told ourselves if price action breaks to the upside, we're going to look for a retracement and a continuation back up. If we break to the downside, we're going to look for a continuation back down. I did like the upside more just because there's more potential, right? To the downside, there's not a lot of potential for profit from here to here. To the upside, we can travel all the way back up really to this $129.29 zone. And you can see that what price action has recently done over the past few days is we consolidated. We broke out of that consolidation to the upside. We've now put in a deep retest to the downside, and we're looking for a continuation up this way. And obviously stops need to be, or maybe not obviously, but stops need to be below this previous level of structure. So depending on where you're shooting for the trade, let's just say you're buying it at market. Again, I don't recommend that. Wait for your trading signal, but let's just say you were buying it at market. Even a very conservative target, just retesting the highs, you're going to get a 1.68 to 1 risk reward. And of course, going all the way up to that 129 level, you're getting about a 5 to 1 risk reward. So this is a great opportunity in my opinion here. Aussie dollar is next. You're going to see a bunch of these across the board, these head and shoulder patterns right here. So we did complete our head and shoulders bottom here on Aussie dollar. Again, we broke the shoulder line, or excuse me, the neckline right here, and we started rallying to the upside. And remember, we had two areas of projection, right? So if we're trading this, my projection was right up here. I'm a very conservative target taker, so I like to take targets at the first sign of danger. The secondary projection for targets is going to be right at the highs here. And if we do this, take our Fibonacci extension tool and drag it from the swing low to the swing high and back down, you're going to see a 1618 Fibonacci extension level right up here. And if we measure this move, swing low to swing high, same area we took the Fibonacci extension, I keep saying retracement, extension from, and we copy and paste this move. Sorry about that. Late at night, just got out the weight room, so my mind is kind of not the sharpest right now, but you see we're gonna have a one-to-one measured move at this level as well. So this would be the next area in which I would project price action to go to on the Aussie dollar. I'm not necessarily interested in longs because we are in the middle of consolidation. And again, just my personal trading style, I'm pretty conservative. So I don't see anything here that says we're likely to get long and break through this level all the way up to the upside. But what I would be looking for is a counter trend opportunity if we do make it to the upside. So if price action does continue up here, this is my next area for looking for shorts. However, if you are someone that's looking for a continuation trade, right, keep an eye out for either a retracement. Let me use the arrow tool here. A retracement back down to this level and then a move up to the highs, or a little bit of high and tight flagness. This would actually be a very positive sign. So some sideways tight consolidation before a breakout and a final extension higher here on the Aussie dollar. New Zealand dollar, something very similar, although I'm not projecting the continuation. We're going to make New Zealand dollar short and sweet. This was one of the pairs that skunked me out this week. I had a rough week in the market, 2 losses, 1 win. New Zealand dollar is one of those losses. But we have come up into coffee cup still there from the live room. Funny stuff. We have come up to the level where I thought price action would stall at, right? You can see the consolidation right near our elephant candle. We call these big standout candles elephant candles because if an elephant were to walk by you, it would stand out and you would notice it, just how this candle should stand out to you. Anyway, these are very good zones to look for support and resistance, supply, demand as well. But I'll be looking for some relief in this zone. You may have to go down to a lower time frame, let's say an hourly. But I would look for a little bit of relief in this zone, a little bit of a retracement back to our previous inside level of structure at a minimum around that 69.80 level. So a little bit of relief looking here on New Zealand dollar, not necessarily a continuation up like we would look for in the Aussie dollar. Now, real quick, I know what some of you guys are saying already. Well, how can you be looking long in the Aussie dollar but short on the New Zealand dollar? Shouldn't these two pairs run similarly? And yes, they should, right? I'm not a big fan of correlations at all, but New Zealand and Aussie do run pretty much the same. But remember what we talked about with Aussie dollar, just going back for a second, right? One of the options was a continuation straight up, but another option was a pullback in the structure before that continuation up. And this is going to be the difference between counter trend and trend continuation traders, right? Trend continuation traders or trend following traders are looking for that extension, that bigger, kind of larger move. Counter trend traders are just looking for the short move. So if we do retrace and get some relief back here, which we can do, we had a heavy news event on a Friday afternoon, like when half the markets are closed or kind of in happy hour if you're in the UK. There's a good chance that we open up Sunday and Monday and the markets kind of evaluate what happened. They had a weekend to think about it and they're like, you know what? Let's change our mind a little bit. So if we do get this a little bit of relief, maybe a little bit of profit taking, whatnot, before continuing up, I don't know if continuating is a move, continuing up, or continuating is a word. That same move would happen on, or should happen on, New Zealand dollar. And for a counter trend trader, again, we're not looking for a full-blown reversal. We're only looking for a move here, so catching a little bit of that relief, and that is quite possible. Next up is the Pound Aussie. Pound Aussie was the big trade we've been looking at for months and months and months, looking for 194's bigger picture. We did get something very similar to Dollar Canada, and this was going to be our first opportunity at getting long, right? We retraced, we got consolidation. What we wanted for, and I think we talked about this in last week's video, is we needed a higher high, higher close, a break and close above this consolidation, a retest, and a continuation up, just like Canada. But we did not get that. We're falling downward. So we reload. We're looking for the next opportunity. This isn't a bad thing because this is going to be the end of our kill zone, right? Just going out to the daily real quick if we erase everything, if you remember. And again, this is why you should be watching this video each and every week, because a lot of these longer term opportunities are going to really stay the same. We're just going to make different tweaks each week as we come back to them. But this is our kill zone, right? It starts at our previous new structure high. It ends at our previous outside return. This is why it's important to understand how to read a price chart, right? And not just hop straight into strategies. Little inside lesson there for some conversations we've been having. But we're getting lower and lower to that to the end of our kill zone, which just means our stop loss is going to be smaller. Again, if we're looking to trade up here, I wouldn't have a stop loss this big. I'd center it underneath the consolidation, but the point in which we would technically be wrong would be below here. Now that we're looking for an entry at the lows here, right, that wrong area stays the same. So all we're doing is giving us a better risk reward on this trade, whether you're shooting for a retest of the consolidation, very conservative, a retest of the highs, or of course the big move up to 194. So let's keep an eye on this. Just eyeballing it right now while we're on it. Looks like we're going to have a 127 Fibonacci extension down at that level as well. Fibonacci extension from swing high to swing low right here before the consolidation and back up. Looks like we're at a 127 right now, so thought it'd be a little bit deeper. I guess not. But yeah, keep an eye on how price reacts down at this level. And I'll tell you what, again, some of you guys are thinking this, just thinking this from the other way. This can also be setting up a head and shoulders pattern, right? We may also see this, a little bit of bump here. Maybe we get some symmetry and repeat what happened on the left-hand side here, and we get a head and shoulders. The thing is, we don't know. And I was doing some social media stuff this week, just sharing some infographics and some cool little kind of trading tips. And I think one of the things I shared was that the difference between successful traders and struggling traders is, well, maybe not the difference, but I said something that you'll never hear a successful trader say is that we know what the market is going to do, right? We never know what the market is going to do. But you see a lot of internet gurus and trading gurus saying that, where it's like the market will do this, the market will do that. No professional trader will ever tell you that. All we know is our probabilities. All we know is that if this happens, then the probabilities are that this will happen. Or if this happens, then the probabilities is that that will happen. So we never know. So if you're asking yourself the question, well, Keel, how do I know if this is going to be a pullback that ends up continuing higher for a trend continuation trade, or if it's just going to be the start of a head and shoulders? The answer is, I don't know. But all you do is you follow your plan, you play your probabilities, you manage your risk. And if you're analyzing the charts the right way, if you lose, right, you're not going to be skunked out for that much. If you win, you're going to get much more than you lose. And also for you newer traders, right, when you establish a plan, right, or plans, right, trading strategies, right, you need to make sure that they don't contradict. Right? If you have a contradiction between what you should take in this situation, there's a problem, right? There should not be a situation where you can get long and short at the same time. There should be very specific things that tell you to get long and stop you from getting short. There should be very specific things that tell you to get short and stop you from getting long. So if you're someone that's kind of in the middle, or you're like, hey, wait a minute, I didn't kind of think about this, I'm getting signals for both, this is a perfect chance for you to revisit your trading plan and make those little tweaks so that you don't put yourself in that situation. Because if you are in that situation, you're just going to make an emotional decision. That emotional decision is probably going to be based off some type of recency bias or whatever happened on the last trade. And trust me, that's not a consistent way to go about trading the market. So don't do it. All right, next up is Aussie yen. This is going to be very similar to Aussie dollar, so we'll run through this pretty quick. But same situation where, I think it was Aussie dollar, but if not, one of the pairs we talked about earlier. Same situation where we had a head and shoulders pattern. We busted out of that to the upside. We had our retracement and extension, right? Good move. We've come into our first sign of danger, this consolidation. So this is one where, again, for me personally, I'd only be interested in the counter trend move. But there is room to the upside. And what I'm going to do is I'm going to change my projection a little bit. I have a minor level of structure circled right here from earlier in the week, which I do think 81 flat is a good level. We're talking about that for potential targets. But we're going to add a secondary level there as well. And if I take my line tool and I just draw out a 1-to-1 measured move, so I copy and I paste it and I drag it onto the retracement, we're going to get a 1-to-1 measured move, aka an AB equals CD pattern, right up here around 81.50s, right? You can also see that we have a pretty significant level of structure there as well, right around these structure highs. If I take my Fibonacci extension tool once again, drag it from the A to the B and back down, you're going to see I have a 1618 Fibonacci extension up there as well, the golden mean. And if we zoom out here, or just go to the daily, what you'll see is that this was a smaller head and shoulders, potentially in advance of a bigger head and shoulders, right? You can see price action has come down here in the past. We created a left shoulder here. We've dropped down and created a head. So if we are going to create a bigger head and shoulders, and again, we don't know, as I just mentioned, but if we are, there's a good chance that we come up to test the same level of that neckline, which would be the zone in which we drew out. You can take it one step forward for the counter trend move, and maybe if we see a symmetrical shoulder, that's a deep retracement, we can talk about that if it actually occurs, first things first. But keep an eye on this level for two reasons. One, again, for a counter trend trader, this should be a nice level to look for shorts, a really nice level to look for shorts. As a trend continuation trader, if you're looking for potential targets for your move up, I'd still be a little bit cautious right here with this minor level, 81 even, but 81.50s is a good secondary level or a riskier level to shoot for as well. All right, lastly, we're going to follow up here on the DXY to dollar index. If you guys remember, I think this was from a video. I do so many of these videos, I don't remember what I put on YouTube and what I don't. But we had our nice little rising channel right here. Very nice reaction off of that. Again, a little bit of relief, not a full-blown trend or reversal, just a little bit of relief in the market. Here's that divergence we talked about. And then boom, we finally kicked back up. We kicked back up to a level, a nice extension here where we are putting in a potential advanced pattern formation, and it's going to be a cipher pattern, right? If we take a look just real quickly, let's delete this real quick. We take a look at a Fibonacci retracement from our swing. Try it again. Fibonacci retracement from our swing low to swing high. We're going to be setting up an X to A to B, B to C. And if we come down to this 786, 92.19s, that's going to be a C to D completion for a potential bullish cipher pattern, looking for a move back up in that direction. So something setting up on the DXY as well. You can look at this and say trend continuation cipher, but I'd be a little bit cautious. This is why we always want to use a bigger picture. Yes, the most recent move was a higher high, higher close. So if we identify a higher high, higher close, then we predict a continuation higher. But remember, the continuation, sorry about that, smacking the water bottle. The prediction, I should say, is a three-part process. We want to predict what price is likely to do, right? Go higher, go lower. The second one is where is price likely to go? And if we zoom out a little bit, you can see that overall, we're still in a pretty significant level of consolidation, right? There's nothing that says that we should shoot for the moon here. So this would make me uncomfortable with any type of longer term continuation. So I just treat it as a normal cipher and take the profits that way and then live to fight another day. That's it. Remember to hit that like button before you leave and subscribe if you're not already. That's the best way you can support the show. Also, head over to www.tier1trading.com. Check out that 14-day risk-free trial membership. We say risk-free because there's no auto bill or upsell or anything like that. Just after 14 days, it's canceled. That's it. We boot you out.